Hello students. Our topic today is Investment Holding Company (IHC). Before we start our lesson, let's review together the learning objectives of the topic. At the end of this chapter, students should be able to define the Investment Holding Company (IHC). Second, students are also able to identify the criteria for being an investment holding company. Third, students are able to explain the tax treatment of investment holding company. Lastly, students are able to compute the income tax liability of investment holding company. Definition of IHC. An investment holding company is a company whose activities consist mainly in the holding of investments, not less than 80% of its gross income other than gross income from a source consisting of a business of holding of an investment, whether exempt or not, is derived from the holding of those investments. Determination of IHC. Generally, the determination of whether a company is an IHC depends on two criteria. The first criteria is that its main activity is the holding of investments. The second criteria is not less than 80% of the company's gross income other than gross income from a source consisting of a business of holding of an investment, whether exempt or not, is derived from the holding of those investments. Any amount of gross income from a business of holding of an investment is not computed as gross income from the holding of investments. Tax treatment. The tax treatment for an IHC depends on whether the IHC is or is not listed on the Bursa Malaysia. The special tax treatment for an IHC is provided under Section 60F of the Income Tax Act for an IHC not listed on the Bursa Malaysia and Section 60FA of the Income Tax Act for an IHC listed on the Bursa Malaysia. Classification of income. For non-listed IHC, investment income is rental income under Section 4D, and interest income and dividend income under Section 4C. Management fee is treated as other income under Section 4F rather than business income. For listed IHC, deemed as a business source is rental income, interest income, and dividend income under Section 4A. Management fee is treated as business source under Section 4A. Permitted expenses for non-listed IHC. Permitted expenses is deducted from aggregate income. Use restrictive formula A multiply by B divided by 4C and restricted to a 5% of gross taxable income, whichever is lower. Whereby A is permitted expenses, B stand for gross investment Inc. chargeable to tax, and C stand for sum of gross investment income and gains from realization of investments. Permitted expenses is directors' fees, wages, salaries and allowances, management fees, secretarial, audit and accounting fees, phone charges, printing and stationery, postage, rent expenses and other expenses incidental to the maintenance of an office. For listed IHC, no permitted expenses using restrictive formula. Common expense is deducted from the respective source of gross business income. Capital allowances and business loss for non-listed IHC. Capital allowances cannot be claimed. Current year business loss is not available for deduction. Unabsorbed business loss is not available for deduction. For listed IHC, capital allowances from main activities can be claimed, but excess capital allowances is disregarded. Psi loss from main activities is disregarded. Unabsorbed loss from main activities is disregarded. Listed IHC, tax treatment of non-main activity. A listed IHC may carry a sideline business activity or not a main activity. Examples of sources are management fees or consultation fees. According to normal tax treatment, adjusted business loss is deducted from aggregate income. Excess business loss can be carried forward to subsequent year assessment. Excess capital allowance can be carried forward to subsequent year. That's all for this topic. Until we meet again later for more interesting topic.